You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That music, or lack thereof, if you're listening live, means it is time once again for a little program we like to call around these parts the Option Block. A little bit of wit, a little bit of wisdom, a little bit of unusual activity, some analysis, some edumacation. Throw it all together. You got the Option Block. My name is Mark Longo, coming at you, if I sound a little bit different, not from our studio in Chicago. No, I am beaming in intergalactically. Because it actually is my birthday today, so I am doing the show. That's how much I like you guys out there, listeners. I do the show on my birthday even, but I did have a little bit of a surprise. I was able to beam in because I'm actually went yesterday to a sneak preview before the crowds, before it officially opens to the public, before the crowds descend on it, to the new Star Wars Galaxy's Edge. It was pretty amazing, so this is a birthday intergalactic spectacular here on the old Option Block, so it should be a fun one. And joining me to help me have this birthday soiree extraordinaire, let's go around the horn. Let's start with, let's go out to the hot seat. Let's go to the land of Fidelity, where we are joined by the last emperor himself, Mr. KONSTANTIN VRANDOPULO from the active trader hot seat there. Mr. KONSTANTIN, welcome back. How are things in Fidelity land today, sir?
Things in Fidelity land is just about regular. Pretty quiet day out here, actually. Kind of in expectation of what's going to happen tomorrow, most likely. But first and foremost, happy birthday to you. Wanted to say I haven't met a whole lot of people that were just a couple of days apart from my birthday. I'm actually August 24th, so we're just a few days apart.
Oh, wow. Yeah, you're 2 days away from a really cool day. So congratulations to you, sir.
That's right.
All right. I think looks like the live is streaming now. So you guys listening live, you can hear it now. There we go. Looks like it's working. And also joining us, I don't know how close he is to the awesomest day in the year, but we shall find out. He is the greasy, not the greasy meatball. He is the rock lobster, who I believe, as we speak, listeners, is grabbing his shotgun and his dog, because he's got to go wrestle some clam poachers. Is that the case, Mr. Rock Lobster?
It's poaching extraordinaire today, although the tide is coming in and swallowing the poachers up. So they're paying the price right now.
They're drowning.
Wild beast.
They're drowning in horror and terror as we speak. Is that what you're saying?
I would say yes, but the tide only moves about an inch every couple minutes, so they'll probably make it back to their boat.
Oh, shucks!
But I'm watching them slog right now.
What is the maximum depth for clamming upon which you cannot do it?
Oh! As soon as the water gets in there, so they're on their high horse right now. So they're getting ready to fire up. In the background, you will hear an airboat that goes, "Woo!" and that will be them leaving. So I will try to give the listeners some real action sound,
some real time audio of clam poachers escaping.
Yes, escaping. My dog will start barking. It will be very exciting for all of about 3 seconds, then it will go away.
I want to hear a few shotguns firing off. You got to give these guys. You got to show them you mean business, sir. You can't be messing around. You've been tiptoeing all summer. It's time to show them the Rock Lobster is here. He means business. I'm Batu here, out in the intergalactic rim of space. We don't take that kind of guff. Blasters are drawn.
Yeah, I guess so. You just use blasters.
Exactly. Blasters are drawn. Han and Greedo, all sorts of good stuff. I may have flown the Millennium Falcon once or twice since the last time you guys spoke to me. I'm just putting that out there. All right, and last but not least.
Oh, and by the way, happy birthday!
Oh yes, thank you, sir.
Your wife told us to say happy birthday to you, so I feel obliged.
She's a very clever woman, that one. All right, and last but not least, who do you think arranged this intergalactic soiree, getting me in ahead of time before the crowds? She knows a thing or two about a thing or two. All right, and last but not least, I don't know where he's beaming in from. Probably not intergalactic. We shall see. He is Uncle Mike TOSAW. How are things going, sir, in stcharleswealth.com?
We are doing really well here. Happy birthday to you, Mark. Exciting day. Enjoy it.
It is exciting. So let's get to it with a little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, welcome to the trading block. This is indeed the portion of the program where we break down what the heck is trading, what is going on. We have a different economy out here on the edge of the galaxy. It's all credits, so I'll have to try to translate all of this into credits for you guys. Let me know if the conversions get a little bit confusing. All right, here we are coming into showtime. Here we are seeing another one of these weird kind of tail ends of the week where the market doesn't really know where it wants to go or what it wants to do, what it wants to be today. Does it want to be a big boy market? Does it want to be a little boy market? It seems kind of spooked right now and kind of moving in a bunch of different directions at once. We got the Dow, kind of the lone holdout to the upside, up about 0.25%. Then we've got the S&P almost literally unched off a slight fraction to the downside. Then got the NASDAQ actually off about a little more than a third to the downside. So take your pick your poison, wherever you live, wherever you hang your hat out there. You're seeing a little bit different on the old screen today. And, of course, our old friend VIX Cash taking advantage of this kind of mixed, slightly down markets today to get a little bit of the week back here. We're up to right about a 17, almost 16.95 or so. So that puts us right around the 17 handle, which puts us pretty much close to unch for the week. We were not for the week, excuse me, since our last show. We were at about a 17, a little north of 17 last show, and we're at about a 17 this show. So not a heck of a lot of net movement out there, show to show here. In VIX, our old friend VVIX taking a bit of a break as well, down to about 100. So still triple digits, still frothy, still elevated, but off the 115, 120 levels we were pushing over the last couple of weeks. And VXX actually off a little bit as well, down to about 25.8 or so, off about half, 3/4 of a handle from last show. All right, let's go back around the horn. Let's go the way we came. Let's start in the Konstantin, last Emperor land. Sir, what is lighting up the tape out there in Fidelity land today?
Yeah, Mark, there are a couple of things that Fidelity customers are trading today that usually don't make the list. So number one spot is claimed today by SPLK. That's definitely a name that we don't often see on this list. That's SPLK Incorporated, down 10% right now. And Fidelity customers seem to be leaning pretty aggressively towards the buy side on this thing. I am not sure what the action is spurred by, but 71% buys to 29% sells. I was actually watching this one. It was on my earnings watch post close yesterday, and the stock, after the report came out, beating Wall Street expectations, was actually up substantially. So it was up around 6%. I think the high in the first 30 minutes of the extended hour session was hit at 141 and a quarter, and it traded on decent volume, around 610,000 shares traded in that half hour. And then, of course, the actual conference call began, and they dropped some news of the fact that they are actually making a big acquisition, and they guided down, apparently, for the remainder of 2019. And that brought about a slew of selling. So the stock is right now trading sub 116, 115.30 to be exact. The straddle price going into earnings in this one was pricing in around a $10 expected move. Into Friday, it's down around $13, so just a little bit outside of that expected move for now. But I've always find it interesting how, the computer algorithms trading in the ECNs right after the report versus, what happens during the conference call. It's kind of a crazy dynamic there. But nonetheless, one of the probably the bigger losers on today's tape, and Fidelity clients are leaning to the buy side so far. The second spot is claimed by something that we don't often see as well. That would be the good old TVIX, the Velocity Shares ETF that is 2 times short-term VIX futures. And that's pretty much split 50-50 here for now for buys and sells, and TVIX is up around 4.4% on the day. A little bit more about TVIX, Mark, during our mail block
I heard you getting some TVIX questions. Our old beloved friend TVIX from back in the dark days of Volatility Views. We've had some good conversations about TVIX. I look forward to having more today, sir.
No, absolutely no question. I would just point out that doing technical analysis on this specific ETF is an absolute waste of time. Levels of trend lines, supports, and resistance, they don't really matter. I'll explain why a little bit later. Then the following one is Apple. That's been in the top 3 for about a week or so here at Fidelity. And Fidelity clients are still leaning to the sell side here. 57% sells, 43% buys. We are getting some pretty good flow there in Apple in terms of orders. And it's flat on the day. I mean, this is pretty much as close to unched as it could be. I think yesterday was up 1 cent on the day, so maybe you could get closer to unched. But down around 20 cents, oscillating around this 212.50 level. We have been here before on many occasions. I think it's interesting that Apple finds, some buyers early in the morning, and then the sellers come in and kind of press it down, and then we oscillate around, 20 to 30 cents for the remainder of the day. We'll see, obviously, how we do here into the end of the week. But I keep telling clients to be on the watch for the 215, 220 range, because those were the pre-tops, especially recent one, the gap up post earnings, and then how we fell out of bed. So a quick reclaim of this 212 area. So plenty of resistances on the top side to be looking forward to. The following 2 names that Fidelity clients are trading are actually in the multi-line retail space. So kind of, big components of the consumer discretionary sector there in the S&P. And on my last check, I think consumer discretionary is the 4th largest S&P sector. So technology followed by healthcare and financials, and then you have discretionary. And that makes sense because you have these huge conglomerates out there. Specifically, Amazon, close to $900 billion. You have Walmart, another big player there, probably $300+ billion. And then we have the 2 stocks that are trading today, or traded today by Fidelity clients. Those are Target and Nordstrom, so TGT and JWN. TGT, obviously one of the biggest movers in the S&P 500 yesterday. I don't remember last time I saw a move that size in a retailer of a large cap company. It was actually up 21% post earnings, just absolutely broke all of the previous resistance levels, just like knife through butter gap top, and went up all day. Obviously, Wall Street loved the numbers that they reported. I found it interesting, guys. I was on the opening rotation, kind of was looking at pre-market movers yesterday, and the first thing, of course, us options traders, what do? We go look at an options chain, and Target has pretty decent markets in options, and it actually has expanded weeklies, which means that they have 5 weekly expirations at any given time, including those monthlies and quarterlies. And on the upside for calls, the last strike that you could trade was $100 strike. So they didn't even have any strikes in the weeklies above the $100 mark. So even if you wanted to buy some upside calls in any of the weeklies, you couldn't do so. So I guess that kind of goes and speaks to the unexpected move, right? The the outsized move that it had. I believe it was about a 3.5 standard deviation move based on the expectations going into this Friday expiry. So massive move. And of course, JWM yesterday, Nordstrom up in sympathy and maybe on hope of Target earnings, was up 5.5%. They reported today, and they're currently trading up around 15%. So also a big day. And we've been seeing some substantial beats from retailers in general as of late. I would say that maybe in this earnings cycle, they're probably some of the largest outperformers. So that kind of tallies it up. In terms of Fidelity client orders, of course, they're about 50-50 for both Target and Nordstrom. Looks like some folks might be using it as an exit door, and some folks are thinking, well, it's breaking through some resistances and we might be taking a shot. But decent order flow there. So top 4 and 5 in terms of orders. That kind of wraps it up for us, guys.
I like that. Nordstrom, I think, definitely rallying more in hope than in than in anything else with Target. Well, maybe we could do that too someday. You're right. Target feeling the love out there from the masses. If you like all that earnings move results, you got them all for you. TheOptionsInsider.com. Click on the Options News and Articles tab there at the top right side, listeners, and you have begun your journey to the dark side or to the light side, depending on how you like to trade. Speaking of dark side, I can see him. I can see his dog. His dog is on the prowl right now as we speak, hunting those clam poachers. Let's get a live update. Mr. Rock Lobster, how goes it, sir? This is where he's so diligent in his
I know. There you go. You hear the sound?
Yes, what is that sound? Oh, that's the boat? That's the boat going away?
And that is the boat.
Oh, you shoot him, you stick the dog on him finally? Oh, there she is. There's mighty
my dog.
beast.
There it is. That was her big effort right there.
That would scare off any clam poacher I have ever heard of.
Yes, exactly. And the poacher is leaving. He is leaving with his tail between his legs and about $500 worth of clams.
He heard the mighty thunderous growl of that beast and decided to turn tail and run.
Yes, and what I can't say is how many buttons I need to push to take my mute off. I have to figure that out. It's multiple buttons for me.
See, I have one. So I have a good setup here. And it flashes red when I'm muted, so I know.
You have the birthday boy. I'm the king of the option block setup.
Yes,
so
that's true.
I totally get that.
Well, I am in space, so I have a cool intergalactic rig here.
Very interesting. Konstantin touched on the TVIX interest. Why today? Why does everybody want TVIX today? I think relative to the SPX move today, I think VIX is up quite a bit. So people are expecting a little bit of a freak out somehow, some way tomorrow. So it will be interesting to see how that plays out. But I think the jump in vol today, it's not really on what's going on today, but what could be happening tomorrow down the road. So it's one of those bid the stuff up and let's see what happens. So the market's looking for a pretty good sized move, I think. And I would not, I wouldn't doubt if we get one. TVIX, I guess when we talk about that as a product, it is not a product I would call reliably crappy. It is interestingly broken, but I'm sure we'll get more information on that. As far as, vol, something we haven't seen in a while is we have contango in zone 2. So we're not in what we call zone 1, like the I'm not worried zone, but zone 2 is kind of vol's higher, but it's not too high. This is the I'm nervous zone, but I don't like that title very much. I don't like the I'm nervous zone, but they're nervous, and normally like the curve is, I would not say contango, meaning at this point, futures are still at a relative premium to the cash, although things are flatter. So for all those that are volatility geeks, the VIX curve is a big sentiment indicator for the market. So once you kind of learn, how to read it, and kind of based on time premium or time has value when you go forward, especially when it comes to options and volatility. So you're trying to figure out, okay, well, are they, even with VIX at, let's say it's 17 right now, and the futures are still pricing at a premium, that generally means the liquidity provider, as far as future traders go, you don't have that willing seller. So vol is still, I would call, relatively bid. There's a healthy bid for it. As much as, the president's trying to solve whatever economic crisis we have, and the Chinese don't want to do the trade thing, and the Europeans think that selling bonds at 0% and then the ECB has to buy them, there's no market signal anymore, which is all I know is the viceroy would be losing his mind over all this kind of stuff right now. It is in for sure bizarre land to me at this point. But be that as it may, and I think that's another reason why you don't have a 14 VIX and an SPX at over 2,900. There's still weird stuff going on, and people haven't really, they haven't gotten used to the new. And the new is, I don't think the Chinese are going to do anything with the trade situation. I think they might wait it out till the next election because they don't have to. Unfortunately, with the tariff thing, U.S. businesses pay the tariffs. It makes Chinese products more uncompetitive, and it's making, it's causing a lot of disruption. And nobody, like any war, you don't know what the unintended consequences is. This is definitely a trade war where they're trying to, somehow level the playing field. And we just don't know how it's going to turn out. So as of right now, I think a lot of uncertainty is sort of baked into how vol's trading. But the market's only slightly off its highs, 5% or so. So it's not that big of a deal, but it's still a deal. So when you look at this and you say, all right, at least for right now, we're still pricing at least more vol than we have today. We've had a relatively volatile 30 days. But at least for today's move, that move in VIX is kind of pricing, tomorrow, the next day, or the day after, maybe for a move. So from a vol, that is my take on the vol world as we speak.
Thank you for that, sir. All right, and last but certainly not least, the man himself, the myth, the legend, Mr. Uncle Mike TOSAW. Uncle Mike, sir, what is lighting up your tape on this kind of middling day in the market today, sir?
Well, I think that the market does look like it's poised for some type of a big move to one way or another. Which way, who knows? And how big of a move, who knows, of course. But when looking through all this, the one thing that really sticks out to me that is, I don't know if it's concerning or I don't know, whatever way with which you want to look at it. We've had a rally in the metals, but silver has not rallied a lot. And so I think that if there really was going to be some type of huge major move to one way or another, and by huge and major, I'm talking like 300-400 points in the S&P, if that's what the market was really expecting, I would expect that silver would have moved up a little bit higher by now. or moved a little bit lower by now, because silver went up to near the 16 level, on reference to SLV, of course. Silver went up to around the 16 level, and we've just kind of sat there over the course of the last week or two. And so on there, it kind of makes me think that I think we should have gone higher if there was more concern for some type of a downturn, if there was more of a flight for safety. Now, of course, the other argument against that would be that the price of bonds has rallied over that time frame. So I think that if we are going to have some type of a major move to the downside, it wouldn't surprise me to see people using like a silver as more of a flight to safety type of thing with where we're going. Also, oil is very low. And in terms of stocks themselves, we are still only about 100 points off of the all-time high in the S&P 500. So we haven't really pulled back that much off of the all-time high. So I think that in the macro environment with which we live these days, or I should say the Twitter macro environment, we definitely have a lot to watch. But the fact that we're still pretty close to the all-time highs with the Twitter market with which we have, and by Twitter, of course, following the president's tweets, life isn't really that bad.
You heard it there from Uncle Mike first, listeners. Life not that bad. Let's see how the rest of the life is holding up for those outside the weather shields, including myself here, all this intergalactic weather. It's crazy, listeners, out here. So let's try. I'm doing my best translating between credits and dollars. It's a lot of work here, though. So especially on the travel studio here. Let's kick things off. Look at how the markets are lighting up the tape, or perhaps not on today's action. Let's look in and see. Let's start. Our old friend VIX actually doing pretty decent paper today, like we mentioned, up a bit today, getting a little bit of firmness going into tomorrow. So maybe some vol players are out there looking for some bargains, driving it up. Either way, doing about 300,000 contracts coming into about halfway through the show here at this point. ADV north of that, of course, about 743,000. They've tacked on about 40-odd thousand to the ADV just since our last show. So things have been moving a bit out there volume-wise of late in VIX land. SPY at about 1.65 million contracts out there. The ADV pretty much almost exactly 2x at about 3.2 million contracts. SPX pushing 600,000 contracts. ADV about 1.4, so a little bit shy of half of their ADV there. The Qs at about 350,000 contracts. ADV 750 out there. And the Russell, a.k.a. IWM, at about 201,000 contracts with the ADV out there, about pushing 450,000. In terms of what's lighting it up out here in individual equity names, let's see. Let's look for ourselves. All right, number 10. Actually, there's a name we don't see on the top 10 too often. Snap. Snap's up there today. 102,000 contracts coming partway into show here. Number 9, Bank of America, 103,000 contracts. Number 8, AMD, usually a top 3, a top 5 at worst. Today, a paltry number 8, 113,000 contracts there. Number 7, good old JD, $1.26 on the tape. Number 5, Softy, $1.26 as well. So kind of tied for, let's call them tied for 6. Number 5, GE, 132,000 contracts on the tape. Number 4, Tesla, climbing the ranks today. Tesla, 136,000. Number 3, Boeing, 137,000 contracts. So number 2, Facebook, $1.38. And round out the top 10, number 1 with the bullet today, Apple, 274,000 contracts. Mr. Last Emperor kind of alluded to some of the earnings stuff popping off. We mentioned it earlier. Today we actually had Dick's. Before the bell, he kind of touched on them. They are trading right now about 34 and a quarter. We actually have an earnings results report, I believe, already live for them on the website, so you can go check it out for yourselves, theoptionsinsider.com, or if you're listening to this show right now, maybe I'll be so inclined to do that for you. Let's see. Dick's coming into the report was at let's see. They closed before the announcement right about shy of 33, 32.97. After their report, they're at about 34.72, so they're up nearly $2. Coming into right now, they're at about 34 and a quarter, so they've given up about half a buck since the time of this report. But still, in the initial blush there, they were pricing in about 2.5%, and they actually delivered over 5, about 5.3% in terms of move. So pretty much doubling what the market expected out there. As we were kind of talking about, it's apparently the days, that time of year for retailers sporting whatever Target to outperform. So apparently we're seeing a little bit of that. We've also got a few more on there. You can check them out for yourselves. TheOptionsInsider.com is the place to go. Meanwhile, Mr. Rock Lobster and I have to get going right now on into a little segment we like to call around here, the Odd Block.
The Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the program where we break down what the heck is going on, weird, wild, whimsical. This is where this is where the Rock Lobster also apparently falls off his chair as well. We'll get him to work on his mute skills. Don't worry, listeners. We'll work on him as we kick things off. Let's kick things off. Actually, one of the larger individual equity option prints today, and one of the weird ones that caught our radar, actually went up fairly recently. Actually, I think during the show. So our eyes of Sauron listeners always scanning, always watching. We're like Roz from Monsters Inc., always watching, looking for interesting activity for you. We're going to kick things off here in a name. I don't think we've talked about this one in quite some time. This is Sempra Energy, ticker symbol SRE. Trading today 140.25, off about half a buck, or about right around 0.5%, a little bit less than that. This one's been on an interesting ride over the past year. A year ago, it was trading 115, so quite a bit north of where it was a year ago, and it's kind of been with a few slings to the downside. It's pretty much been mostly up. They sold off down to about 108 or so, right around. Actually, their 52-week low is 104, almost 105, right around Christmas Eve, and then ever since then they kind of just been on a nice rebound all the way up to about 140. They hit it and sold off back in June, and then they kind of got back up there again, and then sold off again in July. They sold off recently down to about 132. That was in the first week of August, and since then have rallied all the way back up to about 140 and change, selling off a little bit today. So let's see what our Eye of Sauron unleashed for us here today. It's some call action. Doesn't look like it's some call love, though. It looks like perhaps a little bit of harvesting of ye old risk premium. We saw 9,723 of the AAC 145 calls going up for $1.19. These things were $1.05 at $1.45 when this trade went up. So leaning towards the bid, I'm going to go out on a limb and hazard a guess. Probably harvesting a little bit of the old risk premium. This was opening over there on the Philly. There are earnings in this. There are earnings, I should say, coming up, but not in this cycle. They are November 7th, so after October expiration. So he's not harvesting the earnings premium. He's just harvesting a little bit of upside. 145, like we said, the stock right now at 140.25. So he's got about 4 3/4 points worth of wiggle room to the upside. Mr. Rock Lobster, what's your spidey sense telling you here? You think this guy's just looking to harvest a little bit of the old risk premium? Think he's going up tide? You think he's got something else afoot? What do you think this guy's playing at, sir?
I'm feeling this is a risk premium, or he's looking to harvest a couple of bucks. That's what this looks like to me. This is one of those, like, it's a utility that trades out of here I hate talking about this fundamental stuff, but it trades at quite a multiple. So it's like San Diego Gas and Electric, got some South America, got a little of this, got some renewables, got some natural gas, blah, blah, blah. But not it trades at a pretty solid multiple overall. And so to me, this looks like a risk premium trade, but quite a bounce. Like, I could see it like at $100 and something bucks. It was kind of fairish, but it's pretty pricey for a utility company. Just saying.
Yeah, this guy obviously that's a bit. It's already had a decent move, and it is pretty pricey. And he's right in the, if it goes up about $5 more, he's out, and he's happy to do it. And he's taking his $1.19 to do just that. Let's see what else we've got here on the old Eye of Sauron. Watching, always watching. Okay, we got a little bit of flipping the script maybe here out here in Fox. Yes, Fox, the broadcaster. You know them, you love them, but not just any old Fox. We're going Class A, listeners. No, nothing else for us. We only go Class A here. We're classy on the old Odd Block. Class A trading 33.40 right now, off a penny. This one has had an interesting, tumultuous year as well. A year ago, trading almost exactly unch. So on my birthday a year ago, they were trading literally unch. They just ticked up. So they're 33.41 a year ago, 33.41 today. So net to net has not moved over the course of the year. Of course, in between, it rallied up a bit to about almost 42. Had a weird period there in March of this year. It was trading 37 one day, and then the next day it got hammered down to about 27, so sold off 10 handles. And then a day later it was trading 30 again, then 2 days later it was trading 40. So had a 10-point swing to the downside and more, about 13 points back up to the upside in the span of a couple of sessions. Maybe that has something to do with when the Disney deal was going through. Maybe there was a hiccup there. I'm not sure exactly what caused that weird blip, but a weird blip on the chart and an otherwise pretty stable and steady chart throughout the rest of the year. Hit a high of about 42 right around that time as well. And then they slowly drifted down south, down to about 34, up to about 37. They kind of been in this 34 to 37 range of late. They got down to 33, actually 32 very briefly last week. Kind of hovering around on 33.5 right now. So usually a pretty staid name outside of that one aberrant blip there in March. Other than that, it's a pretty quiet name. Let's see what our friend was up here today. Looks like he's betting that this name won't be that quiet for the near future. He's got lifting the offer here, close to it, nickel off the offer, for 4,000 of the SEP 34 calls for 60 cents. The market was 50 at 65. This was opening over there on this looks like this is Philly. Let's see, opening earnings are not in this cycle. Earnings are on the 6th of November. So looks like Mr. Rock Lobster, someone wanting the upside party to continue, and actually 34 is not that far of a bridge to clear here. He's only got to have it run a little bit more. What do you think about this one, Mr. Rock Lobster? Paying 60 cents for effectively a 60-cent out of the money call going out next month, sir.
I like this one. I mean, this to me is what you want to buy calls for. Like, the duration's not too bad. Premium is inexpensive. It's a 27 vol. I mean, I know Fox is like the biggest mover, but it's been moving a lot this year. So, and I know there's always that stuff going on with the takeover and what they got to divest and all that kind of whatever. But they're already there. I think they're already a couple cents to the good on these. So nothing like when you buy calls making money the first day. That's always a good sign. So I kind of like this as a long. The calls are 75 cents now, but it has all the things you want. Low cost for the option, kind of big potential move, mid-30s. So has what you want. Got a lot of leverage in these calls.
I had a feeling that one might resonate with you. It's not super expensive. It's kind of close. I got a feeling. I got a sense of what you like these days, Mr. Rock. I had a feeling that one might kind of resonate with you. Let's see. See, we're not all diehard, degenerate premium sellers here. We like to buy some premium too, and sometimes maybe that one floating Mr. Rock Lobster likes himself some calls and some Class A of Fox. Who knew? I did. That's why we talked about it. All right, let's keep rolling here. We were talking about retailers before, clothiers, all sorts of good stuff. Nordstrom's before, Target. Let's keep it going here with American Eagle. Let's see. We haven't talked about them a little bit on the show. Good old AEO trading today, 1683, up about nearly 4% on the day. So a good day here for AEO. A year ago, though, they were trading well north of where they are right now. A year ago, they were trading 28, almost 29 bucks. So well over 10 handles north of where they are right now. It's kind of been a nice slog to the downside for them ever since. They sold off from August to December. Obviously, the nadir of the market was about 17 bucks for them. Then they rallied back up to May to about nearly 24. So they had a nice $7 rebound after Christmas Eve. Then they sold off pretty precipitously to the downside from about 24 down to 17 very quickly, but within a week in May. So obviously, probably a bad report, turning them to the dark side. Then they kind of floated around that 17 handle for a while, and recently they've been trending lower again, hitting their 52-week low of about 14.5 not too long ago. And today, obviously, they're a little bit north of that. They're at about 16.82. So it's been an interesting year, a surprisingly tumultuous year for a clothing retailer. Let's see what our Eye of Sauron picked up here. All right, it was some weekly SEP call action. The SEP 17 calls, but expiring on the 6th. So not traditional SEP, but SEP expiring on the 6th. 17 calls going up 2,699 times. Right off the offer again. They were 60 at 80. Someone picking these up for 75 cents. Worth noting, they have earnings on the 4th. So clearly, the date of the 6th was not an accident. They were looking to get themselves a little bit of that old earnings upside juice. Let's see. Right now we said we're at about a 1682. So these are also pretty close to the money. Mr. Rock Lobster, kind of a bit of a tale of two cities here. We got a more quiet, staid name like Fox, which is trading at pretty much double the value, and he's going much farther out, and he's getting calls for 60 cents. And we got our friend here going out a couple of days in a $17 stock, $16 stock actually, but it's moving a little bit more, so he's paying 75 cents for these. I'm going to go out on a limb and say maybe you like these a little bit less?
I like these a little less. It's the difference between 20 vol and 70 vol.
The magic of Vega.
The magic of Vega and volatility. Wow, I'm watching the market actually kind of goofy. Like all of a sudden, like Boeing's ripping, all kinds of other little trade stuff. Anyway, but as far as this call goes, I mean, I think there's premium in for the earnings. I thought American Eagle was a bankrupt retailer, but I guess not. Yeah, it was a $24 stock, like you said. So, I think there is some. Maybe they're riding some of the retail love. You were talking about Nordstrom and you were talking about Target. Maybe the consumer's not. Maybe they're not hibernating. Maybe they were taking all their shekels and buying high-end clothes. So, it is again kind of specky upside calls though. So I don't like this as much, but because Eagle can make a move, I guess, on earnings, but I'd say this like a dollar move. You need a solid dollar move to make money on these calls, or more than $1. So it just doesn't do that very often on earnings. So I think this is overall a tougher one to have pay, I would say.
Yeah, this guy's got a pretty tough road to hoe, even though it's not that far from an underlying perspective. Obviously, a much cheaper name, higher vol, obviously, as we just pointed out, and not much time to go. So there's a lot baked in here not to like in this name. But it does show you. It gives you, those of you who poo-poo the Greeks, these two trades back-to-back should highlight the importance of things like Vega and everything else. So let's get to it with a little bit of the old mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, everybody, welcome to the mail block. It's Thursday. It's where we hold court on some of your questions. And Mr. Last Emperor, it sounds like the Fidelity masses, the Fidelity legions, are hitting you up these days about an oldie, I wouldn't say goodie, an oldie, but what did you call it before, Mr. Rock Lobster? An interestingly bad product, something along those lines. It's our old friend TVIX. If you listen to Vol Views for any number of years, listeners, you know we've had some interesting discussions about it over the years. TVIX very infamously imploded a few years back, and yet it still kind of does volume these days, not the least of which being the fact that it's one of the last of the Mohegans in the vol space. So if you want to trade these vol products, you don't have a lot of other choices after XIV and SVXY kind of went the way of the dodo, or in the case of SVXY, kind of got neutered. So Mr. Last Emperor, what is going on in Fidelity and TVIX? What are folks hitting you up about? What do they want to know about TVIX?
Yeah, guys. So the common question right now, especially since TVIX is up, on the board in the top two spot, right, of an equity product that is being traded by Fidelity customers, is kind of goes this way, right? It's like, hey, I'm long this product. I think it's supposed to be 2x VIX. The VIX is up, X amount of percent, and I am not up 2 times, or even on some occasions down money. What's going on here? How come? What is this rigged against me in some way? So this is a common question. Of course, what I always recommend in all of the classes that we host is that if you are trading VIX tracking, exchange traded notes, funds, products in general, do yourself a favor. Please read the prospectus before you engage, especially if you're thinking about trading these ETFs in size. So what is this ETF? Well, it is 2 times. So in other words, it is a leveraged product, and it's trying to get the exposure of 2x the VIX short-term futures. Okay. So a little bit about the history of this, and right off the bat, I just want to say that this product is not optionable, and that's probably a good thing. The reason why is let's kind of break it down of how far away it is from from reality of what it's trying to track. So VIX is the volatility expectations of the SPX or the S&P 500 based on the way the SPX 30-day to expiration options are trading. VIX futures, right, which this ETF TVIX is trying to track, are the expectations of VIX value in the future at a certain date, right? TVIX is tracking 2 of the front months, and it's a daily rolling long position in these 2 front month futures. So if you looked at the kind of underlying holdings currently underneath the hood of what TVIX is holding right now, on my last check, it was around 95% September VIX future, and then around 5% October. Now, as we all know, there are VIX options that are tracking, right, the VIX future contracts out there as well. And what we know about, VIX expirations from the futures markets, whether you trade VIX futures or VIX options, that they don't expire on the 3rd Friday, right? They expire on that Wednesday. So if you look at the front month right now, it is the September month because we just had the August expiration last week. And now we have the September front month being the 18th. Following that, we have the October 16th expiration. All right. So each day between now, August 22nd, and the closer to the following September expiration we're going to get, this product is actually rolling out day by day out of the September future, and it's buying more or essentially positioning into the October. So when the September expiration rolls around, it is going to be close to 100% October. And on it goes, right? Then it starts buying a little bit, selling a little bit of October, buying a little bit of November, and so forth and so on. Now, why is this important? Well, this product has been around since 2011, and it had 6 reverse splits in its lifetime. 5 of them were 1 for 10, and one of them was, I believe, 1 for 25. So if it wasn't for reverse splits in this product, it would have been 0 a long time ago, right? Another way of looking at it is if you go out all the way, split adjusted to 2011, you would have invested $280 million into this product, and you would have held it this whole way. You would have now had $16.55 left, which probably is enough to buy you lunch at Olive Garden, right? So what is this supposed to tell us? This is supposed to tell us that this is a short-term product with a very specific reason to exist. It is not something that you hold over time. Why? Because it is never, it's ever changing. It's consistently rolling, and it's based on the VIX futures curve. So the times when this product or product of this sort of material in its structure benefits is when the VIX futures curve actually inverts. So Mr. Rock Lobster told us that right now we are in contango. And what does that mean? Well, VIX spot is 1663. The September VIX future is 1783. And the VIX October future is 1827. So the further out you go, the higher the VIX future values are, right? Since this product owns the front month and continues to roll into the second month, what it's doing right now is it's selling the cheaper one, the September, and it's using the proceeds to buy the more expensive one, all right? The time when it benefits, right, is when the VIX futures curve is actually in backwardation. where the front month actually jumps up to a much higher level than the second month, and then it's selling the front month at a higher value and buying some of the cheaper one, which is the second month. Now, we know that VIX and backwardation, at least as of the recent past, it's not the type of environment that tends to exist for an extended period of time. So it's not that you cannot use this product to express your views on volatility, but you need to understand exactly what it holds and what your expectations are on those products that it's holding within it. The common question is, well, right now, let's take a look at it. VIX is up 5.13%. Last ticked at 1661. I'm holding TVIX, and it's supposed to be 2 times leverage, and it's only up 3%. Well, how can this be, right? Well, again, if you look at the September future, it is up 2.12%, and the October future is up only 1.5%, right? So you're having this discrepancy, and if you have an illusion that this product is supposed to be doing 2 times what VIX is doing on a daily basis, you are majorly mistaken. And I think a lot of financial media networks usually misspeak and misrepresent this statement that they make as, hey, VIX is low or VIX is cheap, so go and buy it, right? Or VIX is high, go and sell it. Well, what does that exactly mean? There's never really enough context around it, and I think some of these ETFs confuse folks, and they tend to get in them and hold them long term, and obviously long term holds in these types of products just is a complete disaster. So that kind of sums it up. Make sure that you know what you trade, and in order to know what you're trading, you got to read that prospectus for sure.
Yeah, that's kind of buyer beware is really, really very important in the volatility space, obviously. We've talked about this, Mr. Rock Lobster. It's been a while since we've had a deep dive on TVIX, on volatility views, Mr. Lobster. Maybe we're overdue for one because we've kind of dismissed it as just being, kind of one we don't like too much. And yet, people are still trading it, and they're trading it en masse, and as Konstantin pointed out, they're not really understanding it too much. Part of that is because it's one of the last of the Mohicans, right? It's one of the last players left. So he's right. If you're watching CNBC and they tell you, hey, go out and buy yourself some VIX right now, that's one of the ways people think to do it. So what is your use case for TVIX these days, Mr. Rock Lobster?
Avoid it.
Yeah, I was going to say if you have one. If you have one, which is a big if.
Great explanation by Konstantin. Couldn't have done it better myself. Ultimately, the product buys the futures. I don't think it's a very well-managed product because, as we talked about the last time, with the creation units and all kinds of stuff, it got so confusing. It crushed the actual net asset value of the whole thing. It all became knocked out of whack. From that point on, even SPA, like products that we thought were good, like UVXY, when they just changed, the only thing is VXX still at least is doing what they said they were going to do. VIX options, if you understand, they'll do what they say they're going to do. The TVIX from time to time in backwardation, like Konstantin said, gets interesting. But it literally, because it has that 2x, you've got all that what we'll call internal short gamma in the product. It can get very messy if you hold it for more than a couple days because you're just not getting the performance. I think it's easier just to buy 2 VXX calls than it is to buy 1 TVIX. Because VXX, there's a little bit of, price weighting toward VIX. VIX is a littler price. VXX is a bigger price. So when it's like this right now, you get some bang for the buck trading VXX. So just buy 2 calls instead. You get plenty of movement out of it if you want it. That's the solution I use, and that's what I teach people when you kind of want to buy vol on the fly. So we avoid it, to be honest. But I do have it on my screen. But it's not something I actively trade. But overall, that was a well done explanation. And if you were just confused by what Konstantin said, he did a very good job explaining it. But you're like, this is way too confusing. How it works. Right there, then you should not be trading the product. Then you have to really have to understand it. So That's what it is. It is a morass. Of course, we have all kinds of products to teach you of all kinds of products to teach you of all products, but it is not an easy product to trade because it rides the future, not the cash, and that's the key thing. Almost all VIX products are the future, not the cash, until that day of expiration, or at least 2 or 3 days before, when they become really, really ultra sensitive to the cash. So, got to know how it works before you can actually use it as an investment.
Yeah,
that is all I have to say on that one.
When I had that chat with the commissioner from the SEC a few weeks ago, check it out on the network if you haven't already, listeners. I put that question to her. I said, we have these esoteric, funky products in the ETP landscape. XIV is the most infamous, but there are others out there. And I kind of put it on her saying, do we need to maybe have more levels of approval, similar to what we have in the option space? Level 1, 2, 3 to trade options. Maybe you need a level 1, 2, 3 approval to trade various types of ETPs. And I would certainly put some of these esoteric volatility products in the latter, maybe category 3, at the very least category 2. You got to click on something that acknowledges, hey, I understand when I'm getting into a little bit of crazier weeds here before trading it. But she seemed not that enthused by that idea. She seemed like the onus was on the investor and was on the broker dealer to make it front and center that there are risks with these products. So buyer beware, listeners. Do your homework before you trade in these things. Meanwhile, we got to keep on rolling to our final segment. It is time to go around the block.
Around the block.
All right, everybody, welcome to Around the Block. This is the portion of the show we tell you what the heck we're keeping an eye on for the rest of this week. Let's get him back on. I know he's been busy taking bathroom breaks and managing your positions. Uncle Mike TOSAW from St. Charles Wealth Advisors. Sir, what is on your radar for this week, sir?
Well, in addition to all the news that we have going on, I want to see if we can make another run at the 3,000 mark in the S&P. I think that's a key number. I think that just from the experience that we had at the 2,000 level with the SPX, how it kind of went a little above it, a little below it, and kind of stayed really tight to it, I think 3,000 might eventually become that type of a number. So watching that. And then in terms of, if you'd like more information from St. Charles Wealth Management, visit my website at stcharleswealth.com. A lot of exciting things going on. And with the markets at these levels, you might be a little bit concerned. What the heck can you do with that to kind of protect yourself? Or you want to be a little bit aggressive. What can you do for that? If you want an investment advisor that can help you in those things, feel free to contact me. Visit my site at stcharleswealth.com.
There you go. And Mr. Rocklop, the same question for you. What are you watching for the rest of this week? And if folks want to learn more about what you're up to, maybe they want to call you up about TVIX, where should they go? What should they do?
Optionpit.com. Go to the Vol newsletter. And we also have VIX Made Easy, VXX Made Easy, and the Masterclass in Vol. And if you send me a note to Andrew at optionpit.com, I would give you all of them for 50% off. You want to learn how these products work, we lay it out for you. Because if you can't remember what Konstantin said, we put it all on a piece of paper for you so you can figure it out.
There you go. Get it on a piece of paper yourself. Go to optionpit.com. And last but not least, Mr. Konstantin, what are you watching for the rest of the week? And if folks want to reach out to you, they want to learn more about what Fidelity has got going on in the options landscape, where should they go? What should they do, sir?
Yeah, guys. So fidelity.com/options. You can obviously apply for options trading and open a Fidelity account straight from there. If you already have a Fidelity account, you would like to find out more of what we do, fidelity.com/coaching. We do daily smaller size classrooms with our clients and kind of discuss things of similar nature. Buyer beware. Also understand the fact that products like TVIX, some of the others also charge, close to 200 basis point expense ratio per annum. So, there's an additional cost associated with just holding it long, with kind of the failed structure that it does have. What I'm looking forward towards, of course, is tomorrow's presser from Mr. Jay Powell. I think the market is going to be keeping an open ear for that. The bond market has been moving around in much larger swings, I would say, than the equity market. So it's interesting to keep an eye on the 2-year, the 10-year, and maybe even more interesting, the 30-year that actually was sub 2% last week at one point. We haven't really seen that since CBOE came out with this TYX index back in the 90s. So kind of a crazy time that we live in. So we'll keep an eye out on that. In terms of earnings, CRM today, Salesforce, and Best Buy, I believe, next week on the 29th. The reason why I'm interested in Best Buy is definitely in that consumer discretionary multi-line retail space with a lot of exposure to China. So would be an interesting one to keep an eye on.
All right, kick the tires for yourselves, listeners. Fidelity.com/options. Maybe you want to sign up for a customer. You can hit up Mr. Konstantin, the last emperor, the rest of the crew, Trey, Brian, all those guys over there, and hit them up. Let them know, hey, maybe you want to know more about these TVIX things. Why is it so, as I forgot what he called it, not predictably crappy, but just avoid it. So maybe you want to know why you should avoid it. Hit them up. Fidelity.com/options is the place to go to begin the journey. And on behalf of Last Emperor and the Rock Lobster and Uncle Mike and D myself, I want to thank all of you out there for downloading, streaming, and subscribing. I'm heading back out to space for a little bit, but I'll be back in about half an hour to talk all things commodity volatility with a little bit of TWIFO. So join me then. Otherwise, we'll see you back here tomorrow for Volatility Views. And then back on Monday, we start it all again with the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.